What's up, everyone? So we're going to talk about how not to trade the trend. So a lot of time what happens is that when price is trending bullish, let's say right over here, price is trending bullish, someone's going to say, okay, you know what? I'm going to look for a resistance to the left hand side. So you look to the left hand side, you find resistance, you take a sell, and like, you know, let's say right over here, you take a sell, and then price starts to go up, hits the stop loss, you're like, oh shit, whatever. Then you take another sell, we move up, and then this sell works. When this sell works, you tell yourself, okay, you know what? This is going to happen over and over and over again. But the reality is, this is not going to happen over and over again. This is this right here, and even this right here. This is what's going to happen over and over again. Because right here, bearish candle form, we continue to move up. Right over here, bearish candle form, we continue to move up. So more often, you're going to have the trend continuing. The same thing is true when price is going bearish. Okay, same thing is true when price is going bearish. And the smallest probability of something happening is this thing right over here. Because I remember back in 2016 and 2017, when I was trading, I would see gold push down, because those are the time when price was really pushing down on gold. Gold would push down, and I would try to take buys. You know, I try to take buys because price has reached some sort of a support, and I would say, okay, you know what, this should work. I would take buys, and I would just lose, you know, because I wasn't good at trading the trend. And in the beginning, that's perfectly fine, because whenever you're trying to take a look at the trend, you're looking at the trend, you're trying to see the areas of rejection. You know, it's very easy to say, just trade the trend, it's going to be happy, trend's your friend, but how to exactly trade the trend, that's a little bit different, you know, which we go in more detail in Market Fluidity University, stuff like that. But right over here, what we're going to discuss this. Okay, first things first. Price was consolidating here. You can see price was consolidating, whatever, right? Consolidating right over here as well. No candle closed above this resistance here to the left hand side, right? No candle closed above that area. Then there was one candle, this one right here, which closed above this resistance. And then someone could say, okay, like, you know what, now we've closed above this resistance, so now there's a high probability for the next candle to continue pushing up, provided there's volume in the market. Provided there's volume in the market. That's the only, because you got to look at it this way. Whenever price is consolidating, volume is going to be your weapon where price is going to go. You know, next candle moves up. So this is the first scenario where the breakout is happening. Breakout happened where this candle broke the high, and then we continue to push up. Before this candle broke the high, this candle moved down, breaking the low, and then we moved up. Now this is the first scenario where someone can say, okay, you know what, I'm gonna wait for price to break above resistance, and then I'm going to take a buy. I'm going to wait for the candle to close, and then I'm going to take a buy. What happens is sometimes the candle just continues pushing up. So I remember in our community, there were some people who took buys right over here, anticipating price to move up, and we did move up. But there was a majority, and even also, like, you know, maybe majority of you guys, you were waiting for the candle to close or waiting for some sort of a retest to happen for price to continue pushing up. You're probably waiting for something like that, you know, and that's perfectly normal, because when I first started in the beginning, I would look for a, like a retest to happen for price to move up as well. That's what, like, you know, my plan was. But now price is trending up. You know, this is a session, whatever the session is. In this session, we're moving bullish. What do? We wait for a candle to possibly retrace a little bit. Now we have, let me move over here. Now we have a candle that finished bearish. Boom. A bearish candle has formed in an uptrend. We have no wick on the top. If you do know, when a candle has no wick on the top and we have a wick at the bottom, this means there's a high probability for price to move down. But this is an uptrend. Do we sell at this point? If you're a new trader, you'll see this, you're like, okay, perfect time to sell because we have moved up. So what was this anyway? This was at 192.880. all the way up till 193 for 60 pips. Moved up 60 pips. So this is around 60 pips. We moved up 60 pips. So now you're thinking, okay, we moved up 60 pips. I should take a sell over here because price should continue to push down. And a lot of you guys would have taken a sell over here and lost. But, but we're trading the trend. We have to look at what are different scenarios that happen when we're... So before I continue, make sure you subscribe, like the channel, and share this valuable information. This is going to help a lot of people. And when you like and subscribe and you share, that's what keeps me going. I like that. Let's get back to the video. Trading the trend. So we're only going to talk about very simple scenarios. So now when you take a look at this, right? Number one scenario, you have a candle that closes bullish, okay? Candle has closed bullish. And now you're thinking that, okay, candle has closed bullish. We have a resistance right over here. So maybe this range is not enough. Maybe this range is like 15 to 20 pip. Maybe this is a 15 to 20 pip range. So I cannot take a buy here. So if you're coming in with that mindset, which is correct, that's a very conservative mindset. That's very good. You're like, there's not enough range. I'm going to wait for this candle. I'm going to wait for this candle to close above this area, and then I'm going to take a buy. And what happens? The candle just continues to move. Now, back in 2016, 2017, when I was looking at the charts, I would wait for the candles to close as well. And as I would be waiting for the candles to close, prices would just continue moving and I would just miss my trade. And then I was forced to look at impulse entries. Like a lot of you guys know impulse entries. So in this scenario right here, there are two types of traders. Number one trader who is waiting for the candle to close because they are very conservative. And then there's the second trader who has missed so many trades by waiting for the candles to close. And he's like, I'm not going to miss a single trade now because when there's volume, when there's volume in the market and price is trending, I'm going to look for some sort of an impulse entry. And this is where your impulse entry comes in when this candle breaks above the wick to the left-hand side. You're like, awesome, perfect. My impulse entry goes in. There's volume in the market. Price moves up. My stop loss is maybe right here. If this is a big stop loss, it's going to be within the range. And we move up. Right? That's the first scenario. Where the first scenario, this was where price does not come down. See, this is a bearish candle. Where price does not come down to create a support to move up, but rather it just starts rejecting right over here, right? That's the first case, when we don't have a support formed when we're trying to trade the trend. Second is right over here, if you see. Look at this. Price moved down with the big candle. Now, if you're a new trader, you're looking at this. You're like, okay, this big drop came in. Now the trend has changed. And we had volume in London session and the trend has changed. We should correct the trend because this is a New York session, because ICT told us or smart money concepts say that the session should be. No, it doesn't work like that. It's about technicals. If the technicals are saying we're going to go down, then we're going to go down. So, and when you're looking for a sell in a, let's say in an uptrend, that sell is basically counter trend trading, so we have a big candle forming, and if you are a, let's say, a much more mature trader, and you're going to say, well, you know what, the trend is bullish, so I'm just going to look for a support to form so I can take a buy. I don't give a fuck about whether price will correct the London move or the London close move will correct the New York move. No, it's an uptrend. I'm going to look for a support, and then if we respect the support, I'm going to take a buy and I'm going to win a trade. Or if I am looking for a counter trend trade, I'm going to wait for a support to form first and break off this support. Then I'm going to take a sell for price to continue pushing down. Right? So what happens in this case? Let's go candle by candle. We're going to zoom in. Oh, we can't. I thought we could zoom in, but apparently we can't zoom in. Can we zoom in right here? No, we can't zoom in. Anyway, we'll use the software to zoom in. Go by candle, okay? First candle right over here, bearish. Can we take a sell? No, because the support is not formed, it's not broken, and it's not a downtrend, it's an uptrend, so we're looking for buys. Next candle form right here. Can we take a sell? No. Can we take a buy? No. Next candle form right over here. Small body candle. Now, what's going on? Can we take a sell? No. Can we take a buy? No, because it's low volumes. There's no volume here. Next candle right here. Can we take a sell? No. Can we take a buy? No. Next one form. Strong body bullish candle. Now we got the strong body bullish candle let me redraw just right over again, just highlight this. So we got a strong body bullish candle forming. Can we take a buy? Yes. Can we take a sell? No. Support form. So you take a buy, and then the stop loss we know is below the previous candle, and you're expecting the candles to make higher highs and higher lows. So as you can see, next candle closes bullish, makes a higher low, makes a higher high. The next candle, again, higher high, higher low. This candle has no wick on the body. In Market Fluidity University, there's a module on candles where you know if a candle has no wick, what does that mean, how you're going to approach it. So this obviously means there's high volume, and apparently then we continue on to fill this range. So, trading the trend. There are different ways, some advanced, some simple. So we're just going to discuss simple ways right over here. Number one, trading the trend is you're waiting for a support to form. You have a support form, and then you anticipate price to move up. Remember, you are anticipating candles to make higher highs and higher lows for it to push up, right? This happens in a pullback. If you're looking at sells, okay, let's draw right over here. Sells, price is moving down. You're looking for a pullback for price to move down. That's what you're looking at. You know, the second case is where we don't have a pullback. You know, where we have a situation like this. When a situation like this happens, you're either looking at candle closing, you know, above this area, right? If you don't get it, then you're looking at possible impulse entries as we break above this wick to the left hand side. You know, so these are different scenarios. Now, watching this once is not gonna make you profitable. It's not gonna, like, you know, no. You have to watch this, you have to look at the charts, you have to look at different scenarios. Then some days you're gonna see a specific scenario developing and you're gonna say, okay, you know what? I remember this from the YouTube video Raja posted, even though I call him a scam for some reason. I looked at that and that made sense. And now when I'm looking at the chart also makes sense. So perfect. Let me put this and this together and maybe I'm gonna have a winning trade. You know, so that's all that matters. I hope this helps. Make notes of this, make as many notes as possible. And, you know, obviously then we're gonna see you in the next one.